Welcome back, fellow value investors. I'm going to be going over a tiny company based on market cap by the name of FutureFuel. FutureFuel produces biofuel. They take plants and then create a biofuel. They also develop chemicals. And this company is really unique. This was a viewer suggestion. They asked me what I thought about FutureFuel. I analyzed the company and really liked what I saw. What I found out was this company actually has cash on the balance sheet of 77% of the market cap. That's pretty incredible. They're profitable and they pay about a 4% dividend. They've had great growth if you look at the past 5 years. So it was a lot of good things that I liked. And they're also a really tiny company. And I think that small caps have not participated fully in the rally that we've seen in 2023. And I think small caps are going to rally well over the next 6 months. FutureFuel provided their updated financials in the form of their earnings release less than 2 weeks ago. So I have a fresh set of financials to take a look at, analyze the company, and make a decision whether I should buy more shares, hold my shares, or sell my shares in FutureFuel. Before I jump in the video, do me a favor and like my video and subscribe to my channel, and please provide comments. Now let's get into the video. I've developed a process over the years that really reinforces what I believe is a good investment, and it's 3 parts. It's all about the company, balance sheet, discount. The company, I want to put myself in the role of a part owner in that business. I want to like the industry. And the management team has to be doing a good job in operating the business. Balance sheet, debt has to be less than 3 times EBITDA. The less debt, the better. And I want a discount on the stock. I'm a value investor, so I want to buy stock prices that are discounted. And based on what I find, I'll either buy, hold, or sell. So quick history on FutureFuel. If you recall the SPACs that were fairly popular 3 years ago, maybe 4, this was a SPAC that took their capital and bought FutureFuel. And FutureFuel has a big refinery where they do biofuel. They take plants and then create a biodiesel and biofuels. They also can produce chemicals. To be an investor in biofuels, you need to track commodities, energy. And energy hasn't been terrible this year. With regard to oil prices have been okay. But if oil prices rally, and let's say we got $100 oil price, I think FutureFuel would really benefit from that because they would be able to charge more for their fuels. So overall, it's a interesting company. They already have all the capital invested in the big refinery that they have. So that's good. And it's all about really generating revenue, profits, cash flow from this point. Looking at the income statement that was provided in the most recent quarterly release, the revenue for the quarter was fairly flat. It went from 118 million down to 17 million. So fairly flat. The company was profitable, very good to see. So that's good that they were profitable. Profits did go down compared to last year. Year to date, revenues are about flat. They just went down about 1 million, which is fine. And again, revenues are going to be based on energy prices. If oil prices really go up, they're probably going to be able to charge more for their product. And if energy prices go down, the latter. Year to date, the earnings per share looks good at 32 cents. And I use this information to estimate earnings per share for the next 4 quarters. And I'll be using that to value the company based on earnings per share. One thing I wanted to point out, from 2018 up to 2022, they've just have had great revenue growth. They've gone from 136 million up to 282 million. So that's just terrific growth. And one of the things that I really liked about the company, the balance sheet looks really good. They have $206 million of cash on the balance sheet, cash and cash equivalents, and they don't have any debt, which is pretty amazing. And I did the calculation, and it's 77% of the market cap is cash on the balance sheet, which is, I've never seen that before. I've never seen that much cash percentage on the balance sheet compared to the market cap. So I'll take that into account as I estimate the value of the company. And obviously this is well below the 3 times EBITDA because their debt's at 0 and they have so much cash. Looking at the statement of cash flows, the company historically, if I look at the last 5 years, they've produced really good cash flows. Last year, they produced good cash flow. And this year, the cash flow did go down. Not a giant concern because I don't think anything is missing out of the business. I think they just prepaid a lot of their payables. They had a change in equity value. So those things really changed their cash flow. So rather than using the last 3 quarters and then trying to annualize 2023, I'm going to use an average of the last years and get to a good starting point for free cash flow in my valuation. The cash from operations, if I look at the last 5 years, it's just really been healthy. In 22, it was 52 million, but you could see that it's really averaged at about 60 to 70 million dollars. So it's a good cash generating business. And that's one of the things that I like about FutureFuel. I believe that FutureFuel is discounted by 55%. And that's based on valuing the company based on free cash flows and then valuing the company based on earnings per share. I get to a value per share of $11.28, but the stock market will sell you shares at $7.29. Let's go over my analysis. So I'm going to use 75% of 2022 as a starting point. And I think that's reasonable, might be a little light, but that's fine. And I'm going to grow cash flows by about 10%. This would measure, lower than what they've done over the last 5 years, but it's a good, conservative starting point. Terminal value is going to be all cash flows beyond year 4 are going to be 486 million because I'm growing terminal value by 2%. I'm going to take a very high weighted average cost of capital. And the reason for it is this is a small cap stock. So I believe it's a higher risk. So I'm going to go with a higher weighted average cost of capital. When I discount all those free cash flows by 13%, I get the value of those cash flows is 397 million. I'm going to add the cash on the balance sheet of $206 million, and it gives me an equity value of 600 million. The market cap of the company is 267 million. So it provides a very nice discount of 89%. Now, looking at earnings per share, I estimate that they're going to have earnings per share of 44 cents over the next 4 quarters. The historical PE for this company has been 18. That's consistent with energy companies. And I'm going to grow earnings per share by 2%. Based on those factors, I'm going to discount the earnings per share and get to a share value of $6.27 based on earnings per share. That's lower than the current stock price. So it's actually, if you look at earnings per share, it's being sold at a premium. I blend the two, but I believe free cash flow should be weighted heavier. So I'm going to take 2/3 of my value based on free cash flows, 1/3 based on earnings per share to get to a blended value of 55% discount on FutureFuel. Looking at where the stock price is traded over the last 12 months, the stock had some pretty good high points. It was trading at $10 at one point in the month of August, but it's really saw a big downturn. It lost a significant amount from that point. It's down 29% year to date, and it pays almost a 4% dividend. The energy sector has been a surprise to me. I think the energy sector hasn't seen a great rally. We saw oil prices go up in the months of September, October, but the stock prices didn't really rally hard. They pretty much went up modestly. So overall, energy is not doing great for the year. And FutureFuel is pretty much underperforming the sector. And I think it's because it's a small cap. It provides a really attractive discount. You have a lot of value. If this company gets recognized by more investors, if they keep operating with a profitable business, a free cash flow generating business, I think just this stock could double or triple very quickly. So should I buy, hold, or sell FutureFuel? Well, let's talk about the company first. Do I want to own this business? Do I want to be in this industry? And do I think the management team is doing a good job? And it's yes to all the above. I think the business is good, biofuel. I think when oil prices go up, they're going to be a beneficiary. And I know that we can grow a lot of food in this country, and we have excess crops at times, so they can use that excess and create biofuels. Next is balance sheet. So the balance sheet, they have zero debt. So it's about as good as you can get. And they have a very high amount of cash. And they offer a really good discount. So I'm going to keep buying shares of FutureFuel. Thank you for watching the video. I hope you found it interesting. I'd love to hear comments from you on FutureFuel. Let me know what you think. And please like my video and subscribe to my channel. Thanks again for watching.